Welcome to America's Commercial Real Estate Show, your source for market intel, forecasts, and strategies. Hello, I am Michael Bull. Thank you for being with us. Our show today is brought to you by Commercial Agent Success Strategies. Check it out. It's the ultimate in training for commercial agents around the country. Even the most seasoned brokers really love it. Learn more at commercialagentsuccess.com. Well, today we're going to talk about the hotel industry, the lodging industry around the country. And I think it's an interesting sector related to how fast things can change, right? In lodging, you have nightly nightly rooms. Unlike office, it seems to take forever to change and move, which I sell a lot of office buildings, but at our firm here, we also sell hotels. And it's interesting to see what's going on there. Well, let's really learn what's going on. Please welcome my guest. It's Ryan Meliker. He is president of Lodging Analytics Research and Consulting, also just known as LARC. Ryan, good to see you.
Thanks, Michael. Great to be here.
Well, thank you. And first of all, when you look at the different types of hotels around the country, how are things going right now?
Yeah, I think there are winners and there are losers, like we see, probably not that dissimilar from what you see in the office space, but in the lodging space, you've got winners and losers tied to a couple different components. Number one is markets. Certain markets are really performing well, others are performing poorly. And then you have assets within those markets where we've seen a lot of strength throughout 2024 tied to recovery in corporate transient and the group segment, while domestic leisure demand has really been, moderating over the past, call it 12 to 18 months. So, even within individual markets, you can see winners and losers. The big box hotels catering to group doing really well. Those catering to international inbound arrivals also doing well. Those in the markets, kind of like the Virginia Beaches or Myrtle Beaches of the world, or even, hotels in urban markets that are oriented to leisure travelers tend to be smaller, independent. Those aren't doing as well.
Hmm.
So it's a little bit of a mix of all of the above and about trying to find the right assets in the right markets to perform well going forward. And just because certain things have performed one way over the past, 12 months doesn't mean that's where they're going to go going forward. We actually have some differing views there.
So our business travel is back strong?
Strong is a relative term. Is it better than it was in 21 and 2022? Absolutely. Is it back to where it was in 2019? Absolutely not.
Mm.
And the reality is kind of like office utilization. Michael, you sell a lot of office buildings. My guess is most of the office buildings you sell don't have the same number of people in them today as they had back in 2019. And the challenge in the hotel landscape is when you think about corporate transient travel is if you're traveling to go meet with people and those people aren't in the office, you're not traveling to go meet with them. Or instead of seeing as many people because people are only in the office Tuesday and Wednesday, you're truncating your trip and it's much shorter. So we're certainly seeing that dynamic unfold. That being said, as we all know, office utilization has gradually, ever so slowly, been picking up over the past couple of years. That does help and provide some modest tailwinds for corporate transient as it continues to move closer to where it was, even though we don't think it's ever going to get back to where it was. We estimate that this year it'll stabilize around 10% below pre-pandemic levels.
What about the convention business? I just went to 3 conventions in a row. It seemed like it was back in my industry, but maybe the real estate industry is really wanting to get out there more than others.
No, convention is booming. It's great.
Oh, good.
And a lot of that has to do with, if you think about it from the reality is the work from home dynamic has an impact on the group segment as well.
Mm.
If people aren't in the office together as frequently, you end up seeing bigger teams go to conventions together because it's when they engage with one another, or even in-house meetings happening more frequently. So the group segment's doing particularly well. This year, we track the 30 largest convention centers across the US. This year, convention bookings are up about 4% year over year. Next year, they're up about 3%. And really, they're positive in 4 of the next 5 years on a year over year basis. So you're seeing nice uptick in convention bookings, which is going to provide a nice tailwind, especially across a lot of urban markets where that convention business provides a base level of demand that gives the market pricing power for the transient oriented traveler.
Hmm. What are you seeing for rates, for average daily rates and things around the country overall? And then I guess it's fair to segment that into different types of hotels?
Yeah. I think at the end of the day, ADR growth, our average daily rates have been muted over the past few months. And different types of hotels have, we're seeing different, the higher end is performing a little bit better. Again, that group segment and corporate transient's been working really well, while the lower end, the economy, mid-scale segments, which cater more to domestic leisure travelers, have really been struggling. That's kind of what we've been seeing over the past 12 to 24 months. We actually think ADR growth overall is going to pick back up in 2025. That's sort of driven by a variety of factors, but we think that domestic leisure demand is going to improve. The U.S. consumer is going to stabilize, get a little bit better. And then we have some tailwinds going on as well that give us some confidence that ADR growth is going to modestly accelerate. Don't get me wrong. We're not going gangbusters here. I think our forecast for ADR growth next year is about 3%.
Mm.
So it's not anything super exciting, but it's way better than what we've seen over the last couple of quarters. I think last quarter ADR was up 1.5%. The one before that, it was up 2. So we've got a modest uptick, which is encouraging at least.
Yeah, yeah, it is. What are you seeing, Ryan, for valuations and transaction volume in the hotel world?
Well, let's first talk about valuation, and then we can talk about transaction volume. Our view on valuation is that we're continuing to see a modest tick up this year and next year, ultimately driven by a slightly positive, hotel cash flow growth, EBITDA, NOI, whatever metric you want to focus on, is slightly improving. But on top of that, with interest rates moderating, we think that translates into cap rates easing ever so slightly. The outlook for cash flow growth is going to be improving over the next couple of years. And that's largely tied to the idea that, oh, we're not in a recession and we're not entering a recession. Things are okay right now. That causes spreads to compress a little bit in the hotel space, especially. And that can be a little bit encouraging. So we see positive growth, but we're not talking about massive 2-3% growth year over year over the next couple of years. In terms of transaction volumes, we're actually quite positive that we're seeing things pick up. I think the first half of this year was really, really soft from a transaction volume perspective. Now our broker contacts, whether it be your firm, Michael, or others that we engage with pretty regularly, are telling us how busy they are right now. The big question is going to be whether the buyers and sellers can actually reach a midpoint that they're comfortable with as that bid ask spread hopefully closes. There's a lot more optimism surrounding that right now, so we think transaction volumes are going to really pick up. Maybe a lot of those closings don't happen until early 2025, but we think that they're certainly going to. 2025 is going to shape up to be a good year for transaction volumes.
Well, good. Well, a lot of people listening to you are smiling because that's what a lot of us.
Hopefully, we're right.
Yeah, that's right. And Ryan, what about new supply? Has the last couple of years slowed down new supply any? And if so or not, what's the impact there?
Yeah, generally speaking, when we think about hotel supply is relatively muted going forward. Our forecast for supply growth across the industry is about 1% over the next 5 years
Mm.
on a compound annual growth rate versus the long run average of close to 2. So we're talking about almost a little over half of where it's been over the long term over the next 5 years. That's really muted. In fact, as we issue quarterly forecasts for 62 cities across the country, we don't have any one market where it's like, oh, supply is a huge red flag for this market that's causing us to be really, really cautious. There's none that really stand out. Even some of the markets that have the highest supply growth are markets that have historically been able to absorb that supply. The outlook that we have from an economic perspective and the drivers of demand are encouraging enough to give us confidence that supply isn't going to be a headwind that can't be overcome. That being said, if we see major developments, really transition into more hotels, like, risks, and, to give you an example, CIM is developing Centennial Yards in downtown Atlanta. Looks like it's going to be an amazing, amazing development once it's said and done. But a lot of the talk is that they're getting rid of all their office space and just going to build, upwards of 10,000 hotel rooms instead. That's probably going to have a bad and negative impact on the Atlanta market. I'm not saying that's going to happen. I'm not saying it's all going to happen at once, but those are the things that we're much more focused on from a supply risk perspective than what we already know. What we know right now is that there just isn't a lot.
Yeah. Yeah, that's interesting. That is a beautiful development. I've been touring and showing some clients down there. Um, what about some markets, Ryan, that you like, that you think are strong today or moving forward?
Sure. I'll give you three that I think are really fascinating. Number one is Las Vegas.
Mm,
Las Vegas is one of our favorite markets. We all think of Las Vegas as Sin City and the gambling capital of the world. The reality is Las Vegas is turning into a lot more than that. And one of the big things that's getting a ton of traction on is sports and sports related tourism. Obviously, Formula One is there. It'll be there in a couple of months. 10-year contract with Formula One. You now have an NFL team. A baseball team is moving there. The athletics are moving there. They're trying to get an NBA team. You had the Super Bowl there last year. You're gonna see the Final Four there in a couple of years. There's going to be basically because of the success that you're seeing across Las Vegas with all of the sports tourism as professional sports has really embraced gambling. Vegas becomes kind of a hotspot. So that's all really, really encouraging. Economic growth, population expansion, these are all really good things for hotels over the long term. We think the city in 10 years' time is going to look very different than it does today. And it's going to be a huge benefit, and hotels are going to benefit dramatically, not just from the leisure perspective, but just the growth of the overall economy. So it's not just the strip; it's all it's throughout the entire market that gives us excitement. Another market that we think is really, really interesting for investment is Puerto Rico. We do a lot of work in Puerto Rico. That energy grid is being totally redeveloped. Got huge amount of funding from the federal government here in DC that is basically providing a total redevelopment of the energy infrastructure across the entire island. We think that's going to massively shift the market in a very positive way. Some of the biggest challenges you had from a real estate investment are going away with that, especially from a hotel perspective, when the risk of hotels being shuttered because of a lack of power for days or weeks on end
mm,
goes away. That's hugely positive. And that then at the end of the day, for the last 10, 15 years between earthquakes and hurricanes and various other factors, there hasn't been a really good run rate metric. And we think as we enter the next few years, you're going to start to see some of those dynamics. And the third market that I'll highlight that I think is really interesting is Seattle.
mm,
Seattle's got a great convention booking pace, huge strength from inbound international travel, and economy is generally doing pretty well. And I'm sure many of you have seen just last week, Amazon announced that they're bringing all their employees back to the office 5 days a week. And that's not going to hurt corporate transient demand. So that's a market that we generally think will perform really, really well. But that gives you a few that we like.
yeah, I like that. It's interesting to see Vegas, doing so well, and from the sports, and it certainly makes a lot of sense. And yeah, I like Puerto Rico. I have an office building that I might be selling in Puerto Rico, and it's a interesting market. Well, what are some markets, Ryan, that are not as doing as well?
Yeah. Sure. Well, Austin faces a lot of challenges over the next couple of years. Austin is a market that the convention center is closing in March for what will hopefully only be 5 years.
Mm,
That has a huge impact on that market. You're going to see, a massive sucking sound away from it. That's going to have a big impact. The other thing that I think that's worth keeping in mind is rather than just focusing on the top line, it's worth highlighting. Given where we are right now in the lodging industry and what's happening, the past few weeks, there's been multiple hotel union strikes. At the end of the day, we are likely to see massive wage increases
mm,
in favor of the union negotiations in a lot of major markets, ranging from San Francisco, San Diego, Honolulu, Seattle, um, Boston, Chicago, DC, New York. New York will take another year or so, but ultimately in LA, a settlement was reached earlier this year that increased wages by 40 to 50% over the next 4.5 years. It's a massive move, and at the end of the day, union hotels and union markets have really benefited since the pandemic by not having to increase wages at the levels of at the rates that cost of living and inflation have gone up because those contracts were locked in pre-pandemic. Well, guess what? Now those contracts are up for renewal, and we're going to see some big changes. And I think that's something that investors in a lot of those major urban cities have to be really, really mindful of. Because even if you're not a union hotel, if you're paying $30 an hour to stay ahead of union wages at $25 an hour, and the union wages jump to 35, what do you think you're going to do? unfortunately, it's going to impact the entire market, not just the Union hotels.
Yeah, good point. We have the election coming up, the presidential election, and we were talking earlier about demand. Does the results of the election potentially have any impact on hotel performance?
It does, but not necessarily in terms of who wins or loses. It's just
Mhm.
kind of how the outcome plays out. So a couple of things I'll tell you about presidential election years, and this is stuff that's kind of fascinating. If you go back, I mean, obviously, U.S. politics has become incredibly polarizing. You're either super, left or super right. Not a lot in the middle any longer, especially those running for office. And as a result, you get a binary situation of, well, if the Democrats win, things are going to go very much in this direction. If the Republicans win, things are going to go very much in that direction. And that leads to a tremendous amount of uncertainty during election years. So if you go back over the past 25 years, really since the start of this century, and you look at election years, GDP growth has declined on average from the prior year. Business investment has declined on average from the prior year. And each of the last four presidential election years, demand growth has declined from the prior year and RevPAR growth has declined from the prior year. So that's what we're seeing this year. The good news is next year you get some of those tailwinds. However, there's a couple caveats that I want to highlight. Number one is we've got a debt ceiling issue and the funding of the government. Obviously it sounds promising that things will move forward, but even if things, with the press that we're hearing these days, do materialize, it sounds like they're only kicking the can down the road to the end of this year. So that's still a major issue that whatever happens in November is going to have to address and address quickly. You also have the idea that we have former President Trump's tax cuts that are coming up for renewal, and President Biden's expansion of healthcare subsidies tied to Obamacare that are also coming up for renewal. So the implications of all three of those things will have a big impact on hotel demand, just because of how they drive the economy. So, whether the Republicans are in the White House or the Democrats, and whether the Republicans or Democrats are controlling the Senate or the House, will have a huge implication on what happens with some of those factors that will have a big impact on short term economic activity and growth.
Yeah, well, that's interesting. And I think in Harris's plan, she's getting rid of the 1031 exchange or limited it to $500. I mean, $500,000. So I think that could have a big impact on the commercial real estate market.
Yeah, you would think if she could actually get that through.
Yeah,
I think I would imagine she'll have a hard time with that one, but
yeah.
you never know.
Well, I hope she has a hard time if she wins because it would really hurt banks and jobs and just the overall economy.
Yeah.
It'd be a terrible thing, but it is seem to be on the chopping block about every 4 years.
Yeah, I think things get on the chopping block, but then when he comes to office, what can you actually do?
Right.
Chances are we're going to be looking at. Uh, I can't imagine we're in a situation where the Democrats control the executive branch, the House, and the Senate. It's probably some combination thereof, where either the Republicans will have some, the Democrats will have some, and it makes it much harder to get some of those more controversial policies pushed through.
Yeah. Ryan, what would you leave our audience with today to think about for the hotel industry moving forward?
I think what I'd leave the audience to think about is really that there's a huge bifurcation in performance across markets, across asset classes. Not every hotel is the same. Understanding locations within a market, understanding the individual drivers of a given market are hugely important, and you have to really pay attention to what's going on for that hotel in that market to make a wise investment decision one way or another. And a one size fits all approach to the hotel industry does not work. You'll end up with a lot of failure. I laugh all the time when somebody tells me, "Oh yeah, well we just kind of look at job growth around across every market and see which markets are strongest in job growth." And I'm like, job growth doesn't really drive demand for the Florida Keys. It just doesn't. Like you got to understand what actually drives demand in individual markets. So that's
Yeah.
what I'd leave the pay attention to things like that.
Yeah, that's a good point. One of the big parts of our offer memorandum when we're selling hotels is the drivers, right? The man
Yeah,
drivers in the market. So a big thing. Well, Ryan, good information. Thanks for joining us, sir. Appreciate it.
my pleasure. Have a great one, Michael.
All right, you too. And hey, if you'd like to learn more from Ryan and Lodging Analytics Research and Consulting Company, their website is larkanalytics.com. That's with a C, Lark with a C. And thank you for joining us. Please let us know what you think. Please share the show. and reach out if you have any questions or any ideas. My email's an easy one, michael@bullrealty.com. Until next week, be sure that you always lead, learn, and laugh, and join us for America's Commercial Real Estate Show. America's Commercial Real Estate Show is brought to you by Bull Realty, commercial real estate sales, leasing, and advisory services. Visit bullrealty.com or reach out to me directly. My email is michael@bullrealty.com. By ShareFile, designed with real estate and other highly regulated industries in mind, ShareFile offers secure digital solution to simplify workflow and improve collaboration. Visit sharefile.com. By Commercial Agent Success Strategies, 21 cloud-accessed agent training videos. Learn more at commercialagentsuccess.com. You're invited to subscribe to the show wherever you listen or watch the show. You're also invited to subscribe to a weekly email announcing the show topic and guests at creshow.com. Thank you for watching, listening, and sharing America's Commercial Real Estate Show.